Hi, welcome to this video today, which is on the 9th of May. We're on Monday. In terms of today's video, we're going to give our favourite pairs for the week ahead. We've got quite a few trade setups to look at. We'll go to the charts in just a moment. Now, over the last few weeks, we've seen plenty of volatility in the markets, and that volatility is going to stay high. It's been a good time to be trading because big volatility is what we want as Forex traders. Plenty of big trends, particularly in USD pairs, we've been very focused on over the last few weeks. Now, the USD has had a great run to the upside. It's got more upside ahead as well. In our view, pullbacks are buying opportunities. The big fundamentals just out and out bullish for the USD. Now, in terms of recent videos, I've kind of neglected the crosses, but I want to cover some of my favourite crosses in this video, as well as USD pairs. Now, in terms of taking a look at the charts, we're going to do that right now, but just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and get live access to our member centre. You can also follow us on our Facebook page and join our Facebook group of traders as well. Right, let's take a look at the opportunities.
Right, AUD USD. This is a chart I drew in our member centre earlier on today, but the price action has since changed. So I'll go through the updated price action, how you could play this as a fresh position. Now, for anyone new watching our videos, when we do our technicals, they're simple. We only focus on big levels. Now, in terms of any trade we do, we always have a bias from the big sentiment and fundamentals behind the chart first. And now, in terms of when we reversed below 76, we felt the fundamentals were just turning extremely bearish. Had a couple of trades in this pair. We got that move down there, stopped out. Last video we came back in on the big red. We've moved 600 pips, but the fundamentals remain out and out bearish. Before we go to the chart right now and how you can play this one if you want to get in short and you're bearish, just want to show you why we're so bearish. And one of the reasons is this. This is the USD against the Chinese yuan. And when we broke the 640 level, we're saying that will weigh on the Aussie and all commodity prices. Why? Because the People's Bank of China letting the USD rise on the yuan shows that they want to boost their exports. They've got big problems with the economy internally. You can see that with the data. The economy is slowing up. And you've got that big problem with COVID lockdown. So really bad news for any commodity currency, the world's biggest commodity consumer is China. Also, that is supportive of the USD generally. China slowing up the problems, adds to risk aversion, which is bullish for the dollar. Okay, so we expect this to continue its way higher. You can look at the monthly chart yourself, but we reckon 7, then 720. Now, in terms of the price right now, excuse me, let me just go to the price right now on the daily chart. That's a nice move through the 70 level, which is a monthly support level as well as a daily support level. Okay, so we're well clear of it. I think that's a sell. Where would you have your stop? Initially, I'd place it behind the high of the day, 70.70. I wouldn't put it just behind the 70 level. You may see an attempt to try and get up there. Big institutions may push it to grab stops or whatever. So leave it well back. But if you followed through tomorrow, I think you could be tight behind the 70 level, something like 70.40. So I think, yes, we've seen a big fall, but there's a lot more downside to come. I'll just quickly show you the monthly chart. And you can see here we had support, okay? So basically when we broke down there, came back up, broke out above 70, double bottom, monthly bottom, couple of tails over here. It's a really good break going to 60, hopefully. We shall see. But this one's running nicely. Now, the next one I want to look at is another commodity currency, which is going to be USD CAD. Right, so we're on USD CAD, it's a chart from this morning. We're bullish and we're in at 127.80. We did push up above 128 this morning, above 129. Now, in terms of this trade now, I'll just go to it, and it's an easy way to play it, in my view. We've moved up towards the 130 level. Okay, we're looking for at least 135. Okay, so 500 pips more. I would go 130.20, get clear of the round number. Okay, and then pop your stop back here at 128, let's say 70. So it's about 150 pip risk to make potentially 500. Okay, if we dip back towards 129, you could key off that level with a stop back behind the next round number at 128. Okay, so this one's looking like we could move higher, and I think, yeah, when we look at the dollar going higher, that will pressure commodities lower anyway, won't it? Because commodities are priced in USD. So let's have a look at one which is important to the CAD, which is obviously crude oil. Nice thread today. I think that's about 4 or 5% now. Now, in terms of why crude oil has remained pretty firm, it's just war premium. I think that's getting baked in the price. I'd be looking for crude to fall back to 90. I think fair value is probably back at 80. Okay, so oil going down should also help the USD go up on the CAD. Also, I put this in the Facebook group. You can go and take a look at it. Speculative positioning basically points to more USD strength. Got a nice little seasonal as well. You go and check that out in the Facebook group if you wish. Right, last of the commodity currencies, it's NZD. USD, been following this one down since we broke down from the 70 level, and this morning down, yeah, basically at 63.41. Now, in terms of this one, I expect it to go to 60. It might run on to 55. So how is it looking tonight? Let me just go to the daily chart. We're at 63.33. My own view is I think it's a sell. Okay, stop. I think back from the round number behind these bodies here, just clear of them. Okay, so I'm going to say 64.40. So you're basically risking just really 100 pips to make 300. Okay, so yeah, they're the commodity currencies. They're big bear trends, but they can run further. Also, I'm going to be looking at the yen in this video. The yen, I think, could be ready for a turn because stock markets are weakening. Okay, that's going to support the USD, might help the yen as well. And basic commodity currencies always, or any risk currency, will get hit hard if stock markets really start to sell off, and we could be on the verge of a big sell-off. I'll show you some stock market charts in a moment. We'll do some yen pairs after we've finished the USD pairs. I want to go now to Euro USD. Now, I'm not going to go through the fundamentals in detail here. We are just out and out bearish. I've done numerous videos on the euro, which you can check out. My view hasn't changed. Monetary policy favours the US, and the view that in Eurozone you're going to get interest rate hikes to 1% the next year. I just don't think that can happen. If it is, it's in the price. You got Russia, Ukraine. I just feel the euro, it's in a downtrend. Okay, we're going sideways at the moment, but a lot more downside down to the par level. Okay, so another 500 pips. You can sell rallies back to 106.30 or 107, or take a break to a new daily low 104.70. So this pair hasn't really moved at all today, so I won't show you the updated chart. And keep in mind, if you're sitting on this pair, obviously you've got the carry in your favour, haven't you? So that's a bit of an added bonus. But I'm hoping we do pick up to the downside. It's been a decent trend for us since 108.50, but just a bit disappointed we're just hanging around. But I do not think this will last. Right, next pair I want to look at is the euro correlated currency, which is USD CZK. Right, we're on USD CZK. Now, in terms of the dollar, it's been working its way up recently. In terms of more upside, I think there's more to come. Obviously, the Eastern European currencies are very exposed to Russia, Ukraine. Czech Republic did a lot of business with both countries before the crisis. Now that is not the case. If the euro goes down, then basically that will weigh on the CZK, and also if you get big risk off, it will as well. So for us, it's been a nice move up. How would you play this one? So USD CZK. Sorry, that's the monthly chart, daily chart. My own view is the big support is here at 23.50. What you could do is wait for a break to a new high, daily high, stop back from 23.50, and then look on the upside. I'd be looking for 25, which is the level I put on my chart, but I'm actually thinking we might even get up to 26. If we get up to 26, that'd be a really good risk to reward trade. I think the probability of more USD strength is high. Okay, so we like the look of that pair. Two more USD pairs to finish off with. USD MXN is my next one. In terms of the Mexican peso, US dollar did break up there. Then we've come back, trying to move higher this morning. If you look at the major commodity currencies, they've been hit hard, but a minor one, an emerging market exotic like the Mexican peso hasn't. I think the peso should. Okay, it does have a bit of interest rate carry on it. Maybe that is holding the USD back, but I've got a gut feel that we're going to really pick up traction up to the 22 level. Now, in terms of you wanted to play this trade, how would you do it? USD MXM. This is the monthly chart. You can see we're kind of hopefully going to break higher and then up to 22, daily chart. I would wait, if I was coming in fresh, for these candles to give way here. Okay, so say 22.47, and then the stop could be back behind 20.20. Okay, so it's a decent risk reward. I was trying to work out what it was in my head, but it's very good. Okay, if we break higher. Last pair I want to do, which is wrong page, which has been a big winner for us, as USDs are. I've covered this in individual videos as well. When we were down here, huge net short speculative position. We thought they would get hit on stop. Bang, and they do. It's about a 7 or 8% move. South Africa rand actually very exposed to China as well. Okay, so that helped the USD up. Then we got a correction, managed to get back long on this big blue. And this morning we were looking quite nice. What are we doing this evening? Sorry, I need to go to USD, sir. Just off the high, but I think if we take out the high, you could just be back, have a stop back behind this level. Plenty of upside because we're looking for 18. So there's the monthly chart. So you can see just get through the high. I'm not too concerned about these two tails over here. Then up to the 18 level. So back up here. Might even get higher. Okay. But one nice blue and another nice blue, more upside to come. So there are the USD pairs now. I want to look at some yen pairs. But first of all, I want to just quickly look at the stock market. The stock market looking a bit shaky. And if we get a nice big breakdown, dollar get another big push to the upside, and it will really help the yen, which has had a big sell-off. Right, let's take a look at some charts. We were looking for this chart last week to make a decisive break lower. It has. It's taken out a key monthly support level. So if I go to the monthly chart, the monthly support was here, the 20-month moving average and these tails. Okay, bang, we're through. We should go now hopefully down to around 200. Looking for a big sell-off now. Everything is bearish for stocks. I just want to show you. Sorry, I need to go to the page. Where is it? Here it is. I showed it last week. It's very important in terms of how important was stimulus from central banks to boosting stock markets to the upside. We know they're all now looking to wind down their balance sheets. Basically take stimulus out the system. This is for the four major central banks. Obviously, the Fed is the most important. They're reducing their balance sheet from next month. If you want to see how important stimulus was to equities, this is a good quote. If you run a simple regression since June 2009, the starting point of the biggest monetary experiment ever, you'll find that the G4 central bank's balance sheet explains 90% of the move. This is for world stocks, but it's for the S&P. S&P is the most important to watch in our view. Okay. Here we've got global equity flows. You had a lot of money flow in, everyone bearish, but redemptions are just starting. You can see money come out of the stock market. So yeah, so basically bearish of stocks. So there's the COVID sell-off, okay? From the COVID sell-off when central banks basically started printing money to the highs, it was 100% move, wasn't it? We've only seen a partial, kind of correction. So let's see how much more we get. If it accelerates, dollar gets a boost, so does the yen. So let's go and take a look at some yen pairs. And the first one I will look at will be Euro JPY. We are on Euro JPY. Now, in terms of USD pairs over the last few months, we've had a fantastic run. But in JPY pairs, we haven't done very well at all. We missed the uptrend. We then thought it would end sooner than it did, and it didn't. Okay, so I'm hoping we can get some decent trades out of the yen. And I think the stock market going down is very, very bullish. Yen is a safe haven, and keep in mind that speculators hold a really big short yen position. Now this morning we were pressing against the 138 level. I'm hoping it was going to be our stop at 138.50. So we're going to have a quick look at what's happening tonight. Euro JPY. We did get through the 138 level, no more buyers. If I was coming into this one, I wouldn't use too much confirmation. You've got the round number 137 here, below that low and below that low. I'd say 136.70. So clear that 20-day moving average, that low, and then see if we run. I'd be looking for a move down to 132 and then 130 as the speculators get taken out on stop. So this trade, if you're coming in fresh, really good risk reward, obviously, if our views are correct. Now I want to go to AUD JPY. We've done okay in this pair. We're in at 92.80. Today we're at 91.69. Now in terms, what are we doing tonight and how could you play this pair? AUD JPY. You've got a really nice red, which has taken out, well, just trying to take out these two bodies here. I think that's a sell if we go through 90.50. Just a few more pips, and hopefully we'll do that. Then where would you put your stop? I would say you've got a level of resistance there. So 90.93, and then those bodies there. So I'm going to go say 91.60, and then look for a move down to 86. That's my target at the moment, but the way the stocks are looking, I'm going to extend my target down to 84. So basically the whole rally retraced. Okay. So that's looking very bearish. We'll see what happens. NZD JPY, and had a short trade in. We chopped about a bit. We took one at 83.70. Now, in terms of how this one is going, this actually looks really good tonight. So basically, we're down at 82.43. I think you've got resistance basically here, which has been broken. So basically, I would say a stop if you wanted to come in fresh 83, just behind the red, 83.80. Then look for continuation to 80 and then down to 78. Okay, again looking for most of the big rally to be retraced. Where should we go next? Last pair, CAD JPY. In terms of this one, hasn't really broken down at all as of this morning. Okay, now what are we doing tonight? So CAD JPY. That's it. We've kind of broken lower, so we're at 116. I'll just wait for the power level to give way. It's a round number. It's a big round number. Just go the other side. Say 99.80, and the stop I think could be back behind the high of the day, so 101.50. Okay, so that give you 170 pip risk. It'll give it a bit of room. Where could we go to? You can see quite bearish. I'm looking for 97.20 and then 92.80. So basically through this level now, and then we should gravitate lower. So yeah, so they're the pairs. I think, you know, markets at the moment, we live in dangerous times. We've got all that inflation, slowing global growth, geopolitical problems, and now the prospect of possibly stock markets taking a big hit. That keeps us very bullish of the USD longer term, and also getting very bullish of the JPY. Right, that is the video for today. I hope you found it useful. Thanks for watching.